Hi guys, it is just after 2 o'clock on Tuesday the 19th of July 2022. I just thought I would take a look back. This is week 15 of this simulation into financial independence, and I just want to go back to the start and just show you that back in the start of April, the price that we bought into the market at the first transaction was 65.54. Now if you look at the average price that we have at the minute, it's just under £62, and that shows you that by continuing to invest consistently week after week, or month after month, I suppose you could do, without regard to the activity in the market, we have dollar cost averaged our way back down to, well, now pretty much near enough where the market is at. We're currently sitting at minus 1.5%. And there's been a pullback of 0.7% for the day so far. This move in the last number of days and weeks looks to me to be quite settled. I'm starting to think that any fears, whether to do with COVID, whether to do with inflation risk, food shortages or fuel shortages caused by war elsewhere, all these things appear to have been priced into the market, and I think I maybe should apologise to J.L. Collins for this, but when I did look at Bloomberg yesterday morning, the talking heads were talking about risk on. And I think the rise yesterday was something in the order of about 2%, but as I say, it has come back a bit today. Guys, I want to zoom in a wee bit. I'm going to go right in. Well, actually, I'm going to go in gradually. So here's from a week to a 1 day. You can still kind of see the trend line that I had drawn in the past, and the opportunity gap, and then what I want to do is I want to go right in to look at what's that set to, 4 hours, so you can see the dates along the bottom here. So we can roughly see the movement day by day there. I want to take it right into about 15 minutes. And the reason is that I want to have a look and see when the US markets open at 2:30. I want to have a look and see if we can actually see much movement plus or minus, and see if there's much change on this figure for the day. The reason I'm doing this is because obviously the S&P 500 is based on US companies and the US market as a whole, and this the Vanguard ETF is actually running on the London Stock Exchange, as far as I know. So in essence, it is kind of anticipatory, if you like, of what the UK traders believe is likely to happen in the US. It's curious, it's interesting to know, have they actually got it right, and have they predicted the move in the right direction for the day? And if they haven't, well, how far out is it? So guys, I'm going to pause it there. I'm going to resume just before 2:30, and we'll see if we see much movement at that time when the US market opens. Okay guys, it is now 2:27, so 3 minutes to go before the opening bell in the United States. The market here looking slightly less pessimistic than it did before. As you can see, the fall for the day appears to be reducing in size, and we'll see what happens when the bell rings and the market opens. Just while we're waiting for that, let's buy in our weekly £120. We're getting just under 2 shares for that. Not that it matters. The important thing is to be consistent. So we have bought in, which actually I don't think that's executed just yet, has it? Let me have a wee look. Oh, it has. Okay. Now, just this figure hadn't updated yet, that's why I thought it hadn't happened. So we're currently not very far away from the £2,000 mark in investments, and despite the fact that we're currently sitting in negative territory, it would be wrong to think that nothing has been achieved over the last 4 months. We started with nothing invested, and we're currently sitting just under 1900 invested. So obviously, when the market turns around and it starts to go positive for us, 1% of £2,000 is an awful lot more than 1% of £100. So something has been achieved. Now, as you can see, things are moving about a bit here, and that's the effect of the market open in the States, and therefore the ETF here is moving about a bit. It's just trying to find its level. I suppose you could say it's kind of reminds me a wee bit on what we used to call handshaking in technical support realms, where modems had to kind of sync up with a computer on the other end of the phone line. So the syncing it's still going on. Sometimes it can take a while to settle. Normally I think you would find that within sort of 5 to 10 minutes things are pretty much settled, and the direction of travel is pretty clear. You can kind of tell by the size of the candle, the sort of the range on the candle, roughly how much volatility there is. It gives us some indication of the kind of price fluctuation that is happening in terms of bids and offers, and doesn't look as if there's any real particular move that is too far out of whack there. Currently for the day sitting at minus take your pick. 1 minute it's 0.6 something, and the next minute it's 0.7. So it's looking like that's going to be the the price for today. But as I say, that is not as much of a pullback as the gains that were made yesterday. So if we zoom back out again, let's zoom out to a 4-hour view. You know, if you look at this, okay, it was a bit overcooked here, come back a bit, recovered and surpassed it. Again, back down a bit, but again up and surpassed that, and now we're just seeing where it's going next. I have a feeling that the pain, if you like, the big pain, is over for now, and at this point we're just waiting to see some good growth and recovery. That's it, guys. Thanks for watching. If you find it interesting, informative, entertaining, or even if you disagree, feel free to make a point in the comments below. And obviously, if you've liked the video, if you would give me a like or even a subscribe, that would be much appreciated too. See you next week.